Existing home sales. That's our topic for today's Backstage Pass. Hey friends, hope you're having a great day so far today. Stocks and bonds are both down as we move into the late afternoon session here today, just a couple of days before Christmas. Mortgage bonds are down about 8 basis points at the time of recording. The 10-year yield is also down about 1 basis point at the time of recording. The national average for a conventional 30-year fixed-rate mortgage, well, that ended the day yesterday about where we thought it, moved down a little bit to about 6.28%. Today, based on market activity, we're expecting that to creep back up a little bit. And look, it's like we said at the beginning of the week, this week is full of holiday trading in the bond market, which means that bonds are going to vacillate a little bit and mortgage rates are going to vacillate with the bonds as well. So we've seen mortgage rates go up and mortgage rates come down, had a little bit of surprise from the JGB. But we're still kind of in that range-bound area where we expected it to be. Now today we are focusing on existing home sales. Yesterday we talked about new home sales and the information from the NAHB. Well, today we're looking at data that's coming out of the National Association of Realtors. So let's take a look at that data. Now, existing home sales is a data report from the National Association of Realtors. It measures closings on existing homes and also measures the level of inventory or listings for existing homes. And again, this data comes from the National Association of Realtors. This week's report showed that, well, sales were down 7.7% in November, and that was weaker than expectations. The forecast only showed a 6% decline, so we're down a little bit more than what we expected. On a year-over-year basis, sales are down 35%. Inventory continues to move lower after peaking at 1.3 million in August. And as it does every time this year, it's a natural, normal seasonal wave. Inventory peaks during the summer months and it moves back down during the fall and winter months. Inventory declined for the fourth straight month to 1.14 million. This is a decline of 6.6% from the previous report. Now there's a 3.3 month supply of inventory available. This is considered tight because 4.6 months is considered normal. But if you look at active listings, there are only about 751,000 active listings, which means that 34% of the inventory in the existing home sales report is under contract. And you can't go put a contract on it. You can't buy a home that's already under contract. So whenever you look at the month supply of available homes for sale, it's really about 2.2 months of a supply. That's about a third of what is considered a normal market. So still supply is low and demand is high. Homes remained on the market on an average for 24 days, up from 21 days. So homes are staying on the market just a little bit longer, but 61% of homes were on the market for less than 30 days. Now, the National Association of Realtors chief economist, Lawrence Yun, he thinks that things are going to get better in the coming months. He said, and I quote, "The market may be thawing since mortgage rates have fallen for 5 straight weeks. The average monthly mortgage payment is now almost $200 less than it was several weeks ago when interest rates reached their peak for this year." Now, this mortgage rate movement down, it's not quite reflected into the sales numbers yet. And the reason why is because it takes a little bit of time for the public to fully understand or fully know that mortgage rates have moved down. If you're in the industry, in the real estate industry or the mortgage industry, well, you're pretty up on what's going on with mortgage rates. You know what's going on. But if you're the public, it takes a minute for that information to get out to you. So the good news there is that we do expect to see sales to start to increase as the public becomes more and more aware of the fact that mortgage rates have come down. And look, $200 a month, that's a lot of buying power. So we do expect to see some of those buyers that were sidelined on the market start to move back in the market. So we've got this inventory level that's lower. We're expecting to see some of those sideline buyers move back in. All this is going to continue to be supportive of home prices. Now look, that's all the news that we have for today. I hope you have a wonderful day. Remember, stay positive, and we'll see you tomorrow.